Let's imagine you already own your own property, but still owe some money to the bank, and you want to continue your property investment journey so that you're growing your asset base for the future. Let's imagine you don't have a big cash deposit to bring to a new property. Can you unlock the equity in your existing property and borrow the whole amount for the new investment property? And the answer is absolutely yes, you can. That is a definite possibility. So it's called 100%, 110% investment property funding. And it's literally what it is. So we unlock the equity that you've already built up in your existing property, and we transfer it across to a new investment property to cover 100% of the purchase price. Then we allow about 5% for the closing costs in terms of stamp duty and legals, etc. And we also allow another 5% as a buffer for the future. Imagine that the property isn't cash flow positive to start with. That 5% could go towards the interest repayments until the rent grows over time to a point that the property at least pays for itself. That's why we've picked out 110%. 100% purchase price, 5% closing costs, 5% what we call a buffer. So what I wanted to do was today run through some numbers in terms of what that might look like for as an example that you could perhaps relate to your situation. So let's imagine that you own a property. I'm using here in Sydney where the prices are pretty high. So let's imagine you've got an existing property. Let's imagine it's worth $2 million. Let's imagine you still owe $500,000 on it. Let's imagine as an example that the investment property that you'd like to secure, whether that be here in Sydney, although not likely at $800,000, we're more looking like a situation like a great property in Brisbane or Perth or Adelaide. Typically we'd go to another lender for the 80% loan on the $800,000 property. And we need to obviously go to our existing lender for the $240,000 we're unlocking as a line of credit. We're bringing that down to support this new property. So the total funds that we have available is $880,000 for this new property. So remember, it's covering 100% of the purchase price. It's covering all of the closing costs, and it's covering any interest differential there might be between the payments and what you're bringing in terms of the rent for maybe 1 or 2 years with the other 5%. So it really is an excellent arrangement. It means you can continue to focus on paying down your existing home loan, because remember, you don't have a tax deduction on that, but you will have a full tax deduction in relation to any negative gearing that there might be that arises with this new debt, the $240,000 plus the $640,000 for the total of the $880,000. It allows you to move forward in a market that really doesn't show any signs of letting up. The affordable places that we really like at the moment, as I mentioned before, there's some great opportunities in the Olympic city of Brisbane. There's some amazing opportunities in what is the number one performing economy in Australia at the moment, which is South Australia and Adelaide. And there are still opportunities in Perth, even though it's running hot at the moment. So you have to be very, very careful in that market. Thanks again. If you found this content to be valuable, then please give us a thumbs up. And if you'd like to see more of this sort of information, then subscribe to our channel. And if you'd like to know more information about how to use this technique to move your situation forward, then by all means, DM me or reach out. Now, as always, This is just general information and not meant to be personal advice because we don't know your personal circumstances. Thanks again.